Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 28th, last day of the month of February. And today we got Case-Shiller home price and home price index. This data is showing that home sector is continuously cooling down. Look at this. This is December data, and house price index month over month came the same as the previous one, but year over year. Look at this, from 8.2 to 6.6. Month over month, the Case-Shiller home price continues reducing from 0.9 in the negative, and year over year from 6.8 to 4.6. We were expecting a decrease, but not 2 points, almost 2 full points in the Case-Shiller. Chicago PMI lower than expected, lower than before, cooling down. Performance from manufacturing, consumer confidence way lower than expected. Manufacturing shipments negative, services negative. Dallas Services Index minus 9.3. So everything is pointing towards cooling down of the economy. In this case, housing price in December. Remember, this is December data, 2 months ago almost. Lagging data, but it's showing that in December, remember, we got a lot of high interest rates, and this impacted the housing price index. So it is showing what Feds are trying to do. That is, every sector needs to chill, needs to cool down. So this is supposed to be decent news. Bad news is good news, in my opinion, still. But let's see how the markets reacted. And as you can see, the Nasdaq is basically, ranging its range-bound activity. On the daily, we can see that we are hovering this 200 moving average. Super important. And look at this. This is the monthly chart. And this is, look at this. This is basically a super dodgy, big, huge rejection. This is the monthly. The monthly close is one of the data points that a lot of investors see in order to see progress. And as you can see, we are stacked at this 12,200 level. And this huge rejection is showing that we were trying to go higher, but we couldn't accept higher pricing. And this doji is called a gravestone doji. Basically, no progress at the end of the month, but we tried and we got rejected. So taking that into account, you can see in this 15-minute chart that these are huge levels of rejection. This sell-off, balance, sell-off, be the 0 DTE manipulation, oxide expiration. This was on Friday. We got this balance, huge gap overnight. And basically, we are still in range and in value. Still in range, in value, ranging, holding this 200, the white line, the 200 moving average. And, well, basically no progress. It's okay. I hate these days. I don't like range-bound activity days. But, well, it is what it is. Apple is trying to push, and Meta. Why is Meta doing this 3.40% on the day? Well, it's called AI. AI is the big word nowadays. Started with Google, then Microsoft, then Nvidia, AMD, and now Meta. Mark Zuckerberg is launching a top-level team that will work towards developing AI products for WhatsApp, Messenger, and Instagram. I think Mark Zuckerberg is just jumping on board of the hype train. We are creating a new top-level product group at Meta focused on generating AI to turbocharge our work in this area. Well, so the magic words is AI. So this is the only thing why well deep in the green today, and is trying to hold. Basically, I think Meta surprised today with this kind of news. I think investors, let's see if they like it or not, or it's just another day of volatility. But what is sure is that Meta is pushing right now today, one of the big ones, because the rest, Apple is 0.16 in the green, and Microsoft and the rest are barely flat. Yields, well, dollar first is trying to hold, basically. It's trying to do something. We rejected 105. We pulled back almost a very single candle, but this is trying to hold. At least I think 104 will be met by demand again, and I think we might see some kind of pullback and then a reestablishment of 105. This is my intention. The 2-year yield and the 10-year yield are consolidating after this big move on yields. September terminal rates 5.4. This is huge. 5.4 is unbelievably high. And on December 5.3, basically no interest rate cut for this year. Bonds market, they have all crystal clear. No pivot in 2023. Maybe in 2024 they will do it, or they will think that Fed will do it, but for sure this year it's not going to happen. 5.4% is going to be insanely painful. And one last thing, sector funds. Look at this: XLK in the green, XLY and XLF, all offensive, all risk-on sectors, and the defensive sectors are in the red. So something is cooking in here. I was highlighting the fact that we were, let's see it real quick on the charts. I was highlighting this fact in this channel that we were trying to rotate to defensive. You can check my videos on that, but look at this. XLV, it's insanely pushing high. Materials is just pushing really high, same as industrials. But look at this XLV. This is the 5-day performance on the sector funds, and the defensive ones are in the red, are in the bottom. Surprising that we kind of trying to rotate. This was the picture on that, but then, well, it is what it is. So I think defensive sectors not going high is one of the things that may concern you. It would be better if we are going higher with all the offensive technology and consumer discretionary pushing higher, and at the same time staples, utility and healthcare are also in the green. But seeing these defensive sectors in the red in the 5-day chart, it's clearly showing that Wall Street is not participating in this, and at least they are not going defensive. And that's nor bullish nor bearish, it's just neutral. I think this tells us that we have to wait to see what happens with this range bound activity. Nasdaq and S&Ps are stacked in this range, and we might see basically something happening in this pivot or in this pivot. I think there's a lot of sellers up here in this zone in 12,200, and also a lot of buying demand at 12,000, basically in this range down here. This move was insane. It shows you the kind of demand that some buyers are pushing. And the thing is that Wall Street is not involved 100%. They are buying, they are showing. I've checked dumb money versus smart money charts, and I will break that up maybe in tomorrow or after tomorrow, this week for sure. But they are not buying a lot. I think they are waiting for a bigger pullback, and that's why they are waiting. This is some sneaky consolidation. Let's see the volume. Well, right now there's not an impressive volume, but Well, you have to be patient in this market because right now we are trying to close above high of day, but look at the volume profile. This is just balance, equilibrium, point of control in the middle, of rotations up and down. I'm not interested in this market. I will have to wait and see and react to what is happening. So what may happen this week? We have to check the economic data. Tomorrow we have ISM manufacturing PMI. This will tell us some details regarding more PMI. And on Thursday we have on Thursday jobless claims continuing an initial, and on Friday we have the big non-manufacturing PMI. Some talking Feds on Friday, so watch out for that. But for sure, we have to wait. This week is all about. I mentioned that. I said it yesterday. This week is all about PMI, manufacturing, everything, and a little bit of house price indexes. So we have to wait. It is what it is. Sometimes this kind of activity is just the markets. The markets sometimes do this. We have to be patient and wait for our opportunity to react to our levels. And those levels, I shared those with you, and I will wait for those. I mean, we are stacked after this breakdown. We are stacked in this range. We are not selling off actively, but we are trying to hold these levels, and this is kind of good. That fact, coupled with the fact that we are trying to not rotate and sector funds are not going defensive, tells me that I have to be patient in order for markets to go up. You can see big pushes, big rejections, big pushes, now continuous rejection. Let's see if it's volume. Yeah, volume. This is a volume top. We'll have to see. So for now, you gotta be patient. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel, support the channel, support my efforts, and click the bell in order to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I have to read your time, and remember that trading day is not over yet. We have to be patient, and overall discipline and risk management are key for success. Stay safe, everyone.